to get us started. Thank you.
Okay, thanks a lot, and hi everyone. My name is Wee Ping. I'm currently the Chief Investment Officer of WeHer Holdings, the group company, but I also manage a few businesses. And people may not know, but weeping is synonymous to crying. So a lot of my friends call me Weeps. So if you guys meet me along the streets or what, happy to be called Weeps, you can shout, and I'm probably the only one that will respond. So very happy to have all of you here. I hope either you had a pretty good breakfast, or if not, we will try to be as efficient as possible so that we get through this, and then you can have your lunch, or maybe you're eating behind the scenes. So without further ado, I would like to first 30 seconds. I will introduce the panelists here, the participants. So uh, again, my name is Weeping Weeps, and then I've got Andy Lu here. So Andy is our CEO of the construction division, construction business, and then I've got Miss Janet Lim. She is the group CFO, been with us for close to 10 years. Unfortunately, we don't have a budget to buy her, a new laptop with the video capability, so we can't see her. And then we have just joined us, Mr. Goh Cheng Yu. He might need to change his name. It's still called Goh Wee Ping. But Cheng Yu runs the Singapore business, the real estate business. And last but not least, we've got Kenneth Ong. Kenneth is the VP of our capital and communications team. And he has helped put some of this, especially this slide that you see in front of you. So, I think what you guys may be very familiar with is going through multiple slides, and then someone like myself will be talking. But today, I promise you, this is going to be the only slide that you'll ever see, because with this one slide, we can explain everything about WeHer, right? It's that simple, and it's quite fundamental. So if I can just jump straight into the presentation or the narrative. WeHer was founded in 1980. If you can see from the bottom left of the screen, by uh, 6 founders. 4 of them are brothers, and 2 are brother-in-laws. So they did only one business, which is in the construction industry, from 1980 to 2008 for a good 28 years. And they got themselves listed on SGX. While they were doing so, they brought on 2 more brothers onto the shareholder list, and became kind of the founding shareholders of WeHer that you see today. So now with 8 founders, we are 8 family branches. So from 2008, which is the second circle, all the way until 2025, for the past 17 years, as you can see, the timeline chart is very active, right? Because we've been going through multiple transformations, multiple growth of the platform, and multiple value creation. So let me walk you through some of this transformation that we did. Firstly, with deep expertise in the construction business, in 2009, we went into property development, like a lot of the construction families that some of you may know in Singapore. So that's in 2009. So we started to do build to sell industrial in Woodlands, in Kaki Bukit areas. And then after that, we went into residential with the first major flagship one in Punggol that we launched, I believe was 2012, called Park Centros. And from then on, our network increased in Singapore in the real estate industry, and we had the opportunity to look at a niche asset class in Singapore called workers' dormitory. So we were pretty early entrants into the workers' dormitory business in 2013, as you can see from the 4th bubble. The first project that we did was in Tuas South Avenue 1, called Tuas View Dormitory, which we affectionately known as, our seaside resort, because it's just right beside the sea. It is close to 16,000 beds from a capacity point of view. And today, we still continue to own and manage the asset with our JV partners. So that's in 2013. In 2014, we expanded beyond Singapore's shores into Australia, and we did our first acquisition in Brisbane. From then on, the Australia business has been on a fast track of growth. And notably, as you can see in some of these brackets here, one of the main themes and asset classes that we developed was purpose-built student accommodation, which we call PBSA for short. We went strongly and decided to scale up towards the end of 2016, and we had a strategy and a vision in mind to grow to 5,000 beds that we own and operate, with a target budget of 350 million Australian dollars. But from a risk management point of view, right, we didn't want to put all our eggs in one basket, and therefore in 2017, we branch out another new business, new vertical, which is a real estate fund management business called WeHer Capital. So this is where this is one of the business that I manage till today. So equipped with the fundraising capabilities, we were able to raise sufficient funds together with balance sheet money from WeHer Group, and we were able to execute very strongly on the strategy, and that led us to two very impactful outcomes. Number one, from 2017 to 2022, we managed to outperform what we wanted. So our target was 5,000 beds. We ended up with 5,662 beds. And that was across 5 cities and 7 assets: Sydney, Melbourne, Brisbane, Adelaide, and Canberra. So with that, right in the middle of COVID and the pandemic, I must say GIC, which is Singapore's sovereign wealth fund, was very was a long-term investor, and they saw the value in our portfolio, and we managed to divest 50% of the portfolio to GIC at an equivalent gross asset value of 1.1 billion Australian dollars. So that was completed in 2022, and post-pandemic, the market rallied, and we had a very strong performing portfolio. And very quickly, within 2 years, we were able to outperform and generate yet another billion-dollar divestment transaction in the market. And we sold the entire portfolio to Greystar, which is a large US vertically integrated owner, operator, and manager. So the 100% gross asset value of that transaction was 1.6 billion. So we made a lot of money for GIC. We made a lot of money for ourselves, and we are very happy for it. But that also cemented our 10-year track record in doing purpose-built student accommodation in Australia. So that was a 10-year journey. And along the way, because of the student housing business, we wanted to be fully vertically integrated. And that's why we also set up our own student housing brand called Y Suites in 2020. And today, Y Suites is also managing all our portfolio. And while we were rapidly growing this business, and it reached to a stabilization level once we divested 50% to GIC, we then went on to look at what's next for the business. Because one of the key philosophies is we never rest on our laurels. So we are always looking for what's next to do. So in 2023, the Australia business, we also went into what we call the land subdivision business, where we go to the suburbs. For now, we are in Southeast Queensland. In Australia, most of the mom and dad still love their land and their house. So this is a very interesting market that most Singaporeans do not know of. But what we do there is we work with local partners to acquire and originate land, and we bring it to development approval for low to medium density residential lots. And from there, we are able to then have multiple options, whether we sell off to another developer to develop on the DA approved land, or we can develop ourselves, or we can find a joint venture partner to develop. So this has proven to be a very interesting business, and we look at it as our future engine of growth for the Australia business. And finally, uh, I want to bring our attention back to what happened this year. So after the sales of our student housing portfolio in Australia to Greystar, we had close to 400 million Australian dollar coming back to WeHer's balance sheet. So now we have a big pool of Australian dollars. But at the same time, we also see a lot of good opportunities in the Singapore market. But as you know, the Singapore and Australia dollar currency, it's a bit weaker than what we originally entered in 2014. And therefore, our strategy was to keep our Australian dollars in Australian dollars and try to find ways to originate more Singapore dollars. So that ultimately culminated in us establishing our multi-term note program in Singapore dollars, 500 million program that we set up, of which to date we have already drawn 205 million to fund our Singapore initiatives. And now I will pause here after I've given the illustrious history of our past 17 years that showed the growth from a construction business to a multi-business platform. I will hand over the time to Andy, who will give us a bit of an update on what's happening on the construction industry and why are we so excited about the next 5 years for WeHer. Andy, please.
Thank you, Wee Peng. Good afternoon, everyone. So I'm Andy, and currently I'm managing the construction business unit for WeHer. So currently, I'll say that the construction outlook in the industry is pretty good. There are many projects coming out, mega projects, as well as a lot of public projects from HDB especially. So the outlook currently is very good. So for WeHer Construction, this year we completed two projects. The first one is a HDB project at Bidadari, which we completed in June this year. This project was we were awarded just after COVID, so it was a very tough project due to the after effect of COVID-19, and we faced quite a lot of challenges for this project, but finally we were able to complete it this year in June. So the second project that we completed is the Pioneer Lodge, which is our own worker dormitory. We obtained the phase 1 TOP in May earlier this year, and we just managed to got the phase 2 TOP for the whole project end of October. So these are the two projects that we have completed this year. So currently on hand, we still have 6 ongoing projects. First one is our own condominium project, Bartley View, which we will be expecting to complete in Q1 2026. Second project is NEA project, Mount Vernon Funeral Parlour Complex, which we are targeting to complete towards end of next year. The third project on hand now is a private project, Teochew Building at Tank Road, which will be going into 2028 completion. This year, we also managed to secure 2 new HDB projects. The first one is at Keppel, Berlayer, which is 1039 HDB dwelling units, 236 million. We got this project in April this year, so works are ongoing, piling stage currently. And second project that we managed to get this year was another HDB project at Bedok, Chai Chee. So this one is for 862 HDB dwelling units, and it's also contract value 203 million. And these two projects will be going into 2029 completion. So recently, we just got another project, which is our own international school project, which I think later on Chen Yu will be sharing a bit more on this project. So this one we just got awarded from our property side. So this is contract value about 150 million. We'll be starting work in early next year, January. So for complete in 2 years' time. So also we are expecting another of our own project, which is the GLS Springfield Thomson GLS project, which we should be getting the letter of award from our property development site end of this year. So the work will be starting next year. So currently 6 ongoing project, and the Upper Thomson will be starting next year. So what we see currently is that there are a lot of changes in the construction sector industry because of the transformation. So we are actually also actively currently transforming. So we are updating ourselves and improving our management using integrated digital delivery. We are digitalizing our workflows, and also we are starting to go into new technologies like robotics and automation, as well as looking to integrate AI into our workflow. So these are things that currently we are working on to help us to stay in front of the industry. So construction industry is still very, very competitive, although there are many new projects coming on. It is still very, very competitive. And nowadays, no longer projects are awarded purely based on price. So we have to compete basing on price as well as quality. So we are constantly upgrading ourselves to make sure that we are performing well and we are able to secure new projects. So moving forward to the next year, we are still looking to tender and secure 1 or 2 more new projects in the coming year. So currently, without considering the Upper Thomson, our order book currently is close to about 800 million. So with the addition of the new Thomson project, it will go above 1 billion. Yeah. So that's the update that I have currently. Thank you.
Okay, and
Back
thanks.
to you, Wee Peng. Yeah.
Yeah, thanks, Andy. So it seems that we are going to have a few more good years in the construction industry. Just a little bit more, half a minute, on how we look at the construction business, which some of you may have some questions. I think generally, if we look at, people always ask the question, so what are the kind of gross margins that you get? I would say, as what Andy mentioned, today is no longer competing on price, and it's a quality, especially for HDB projects. We do not need to put in price that is very close to our cost with little margins or even below our cost. So today, I would say a very good average or estimate of gross margins for any construction project could be anywhere between kind of the 8 to 12%. From a gross margins point of view, right? And then you can apply your own calculation, to what that means from a profitability point of view. So this is something that I just wanted to add. I will hand over the time to Cheng Yu, who will walk us through our Singapore development projects as well as the workers' dormitory business.
Hi, good afternoon, everyone. I think thank you for the opportunity to share WeHer's property perspective. So for me, I'm the CEO of WeHer Property, and I manage the Singapore property development and also including the workers' dormitory sector. Okay, so about my outlook on Singapore property development, I don't think I can look too far. I think in the near medium term outlook remains stable, but increasingly disciplined. Yeah, so I think the underlying owner-occupied demand is still quite resilient, supported by the population growth and the long-term urban planning. So I think as long as you support the master plan, you buy along the master plan, I think the demand will still be there. That being said, I think the buyers today are also more selective. So it can be seen by, you see all the new launches, some do very well, some don't do even well. So this means that buyers are actually very selective in terms of the affordability, the location, the product relevance matters. For example, the size, whether it's near the school or whether it's near any commercial nodes or transport nodes. Yeah. So on the supply side, I think developers will continue to contend with elevated pricing. Yeah, but I think we are shifting to more and more selective and disciplined approach. So this can be reflected by our recent acquisition of the Upper Thomson Parcel A. I think prior to this acquisition, actually, we also participated in several other land tenders. Some we put in offer, some we walk away, where pricing do not meet our return threshold or where the risk profile is actually bigger than what we can undertake. Yeah, so luckily we got this Upper Thomson, and Upper Thomson stood out due to its strong fundamentals lah. Basically, the connectivity, the established amenities, the livability there near to the forest and the nature, I think allow us to underwrite returns more prudently lah, despite in this challenging environment. For Wehe Property, beside residential, beside industrial, we have always wanted to go into adjacent asset classes. So this year, actually, we have successfully goes into two. One is our maiden development of the international school project, Wycombe Abbey. Yeah, we have found a very good JV partner that is very good in doing this, and we both make a decision that Singapore long-term growth outlook for international school will be strong, underpinned by the rising tourism, growing expatriate population, and Singapore continued positioning as a global business, financial, education, lifestyle hub. Yeah. So with this rising tourism and continuing to be a global business, education, lifestyle hub, I think another asset class is also very, very bright looking lah. So it's a hotel. So this year we also venture into hotel. We partner with Aravest. We bought Hotel Miramar. Yeah, and I think all this also reflects that our discipline diversification, looking at the price we pay, or that we are quite prudent. So for this year, we are quite happy. Yeah. Okay, for workers' dormitory sector, I think the demand structurally is actually very positive lah in the next few years. The demand of it still outgrow the supply. It is still a very good asset to own now. Yeah. We have just obtained TOP for our Pioneer Lodge, our workers' dormitory in Soon Lee. The second phase is TOP, and we will be getting our FIDA license, the Foreign Employment Dormitory Act license, maybe by this week, and we'll be able to make it operational. I think currently now the support that we receive on the ground, the demand on the bids are still very encouraging. And we still remain very positive in the workers' dormitory sector. Yeah. For my outlook of these two segments next in the future, I think both will still remain positive in the short term. Longer term, we will have to take a more prudent approach to it. But in the short term, maybe 2 to 4 years, I think is still quite good. And for us, Wehe Property, our top priority next year with such a big pipelines of projects, I think the top priority will definitely be a strong execution, to have a strong execution team to ensure that these projects are developed in a timely and quality manner. And also, for these two projects, we also have new partnerships. So our priority will be also to strengthen these existing partnerships and also to find more new partners so that we can do more things. Yeah. Thank you.
Okay, and thanks, Ching Yu, for making us all very optimistic about both businesses under Wehe. I would probably also just add that for the Singapore property side, although we have done a lot this year, but these were all through very prudent planning since the start of this year. Partner selection, capital asset allocation, deployment planning, contingency planning. And I think the underlying fundamentals are always still the same for us, no matter what kind of whether is it a core business or adjacent business that we go into. They need to meet our internal financial hurdles, which are typically not low. Secondly, there either needs to be a construction element to it, whether we are building for the joint venture uh, partnership, or we are able to value add from a construction point of view. So, for example, for the international school that we are building, Wickham Abbey with our partners, because we are the majority partners there, we're able to also provide our construction service to the JV company. For the hotel, we are not doing the construction work, but at the same time, because of our network and our expertise, we're able to add a lot of value to our JV partners during the contractor selection process. So this is what I'll add for the Singapore business. And then moving on, just looking at timing, we're half an hour into this panelist, and I think we really want to spend more time to answer questions. So I'll just finish up by just talking about the Australia division. So for the real estate business in Australia, largely as I touched on just now, there are two engines of growth that we are looking at from 2026 and beyond. Number one is obviously is in the purpose-built student accommodation space. As I mentioned, we already spent the past decade, the past 10 years, building up the expertise, building out the pipeline, enriching our ecosystem in Australia, and cementing ultimately in two very successful billion-dollar transactions in the market. So it will be a waste for us not to double down or even triple down on our expertise. So definitely over the next few years, you will see us again going very strongly in the purpose-built student accommodation space in Australia. And then secondly, which is also what I touched on just now, in terms of the land subdivision business, we made some experimental bets back in 2023 so that we can figure out, much like what we did for Australia PBSA 10 years back, right? We start small, we are very prudent, and with a lot of guidance from, the first generation and the founding members, they're all still very active in the business. We figure out again the whole process, and figure out what it means to win in this business. And we are very happy that for the past 2 years, we have found the right team, the right partners, and the right approach to fund these kind of projects. So again, from 2026 onwards, the land subdivision business in Australia is going to be a very big engine for WeHer's future growth in the next decade. So with that, I will finish off the presentation and then hand it back to Phillips to conduct the Q&A session. Thank you.
Okay, thanks, WeHer's management. So I think we can start with the Q&A. So I think first question we have is that what's your current order? Are there any additional orders awarded in second half 25?
Sorry, do you mind sharing that question one more time?
Okay, so the question is regarding the current order, and are there any additional orders awarded in second half 2025?
You mean for construction?
The question is quite vague. It does not state the particular.
I mean, if we assume it's for construction, so maybe I let Andy handle this question in second half.
Yeah, okay. For the order book, right, actually, as I've mentioned earlier, we secured two new HDB projects, which was first half of 2025. Second half of 2025, we just recently been awarded our own international school project. So that is one. Secondly, for our Upper Thomson GLS, it will likely be awarded this year as well, although the construction work will be starting next year. So we are expecting these two our own internal projects will be awarded this year in second half 2025.
Okay, thanks. The next question is regarding the construction order book. So do you have any intentions to increase that, and what's your capacity utilization?
Andy.
Yeah. So as I've mentioned, with these two new projects coming on, right, we will be hitting above 1 billion in our order book. So in the coming year, next year, we will still be looking to add one or two projects to our order book, but we are a bit more prudent. We want to look at the correct project and reasonable margin, because we currently are at almost full. So we are able to we have sufficient project, but we have two projects will be finishing next year. So we are also looking to replenish. So in 2026, we hope to get another one or two new project with a reasonable margin.
Okay, thanks. Next question is, what's the expected development timeline of Lowood 1? Are the sale of its residential lots expected to contribute to FY 2026 revenue?
I will take this question. Yes, the plan, there are plans to start developing this project for 2026, because we already got our DA approved. So now we are planning for the next step. Yeah.
Okay, thank you. Next question is, what's the occupancy of Pioneer Lodge 3.1K beds currently? How does rental rates of Pioneer Lodge compare to TVD?
The 3.1K beds, you mean? So the 3.1K beds is actually our phase one. Pioneer Lodge, I think we separated our TOP, our completion, into two phases, phase one and phase two. So the phase one is actually currently fully occupied. Yeah, the 3,144 beds. And phase two, we are unable to start operation yet because we just obtained completion, and most probably we will be able to start operating hopefully by middle of this month. Yeah, but we have already some long list of built up or committed tenants already. Yeah, the others are just waiting for us to be able to start operation, then they will commit the tenancy.
It's a bit hard to compare apples to apples, because TVD is quite stabilized. So you see last year and this year the occupancy is generally there, but our Soon Lee dormitory, we're just at the start, at the cusp of operation. So I think this question is probably we can visit it again next year or the year after.
Yeah, let us all stabilize first, then we can make a comparison.
Okay, thanks for the answer. Next question is, are there any updates regarding lease extension of JTC? Has conversations with the authorities begun?
Yes, conversation with them has begun, but there's no 100% certainty, but we are still having very encouraged conversations with them. So yeah, I think we have to wait till next year, then we can have some certainty.
Okay, thanks. The next question is, are all project revenue recognized progressively or upon POP?
Janet?
Yeah, we recognize progressively based on percentage of completion.
This is for residential.
Or residential.
Residential.
Yeah.
Okay, thanks. Next question is, are there any plans to apply PBSA expertise in other geographical locations besides Australia, such as Singapore?
We could, but it's a question of where are the opportunities. But for some of you that may have maybe research about this sector, there are multiple opportunities everywhere. There is always a need for student housing. I've even gotten some inquiries from as far as Saudi Arabia, Riyadh. But so it's a function of where we want to focus. I think we still see a lot of opportunities in the Australia market, and therefore this will be where we spend 80% of our time to execute for next year. And then for the rest of the 20%, we will explore where the network brings us to, and then we will go into the market. Again, like how we go into all our previous ventures, we will go in small, we go in prudent, we take our time to prove ourselves up, and then if it makes sense and if we are sure of our capabilities, then we are going in a big way.
Okay, thank you. I think there's some further questions regarding student comms.
Sure.
There's a question from the chat. Can you explain why Australia over some neighboring countries, namely Malaysia? And then also there's another one. How do you see the student dorm business in Australia versus UK?
Okay. Yeah. So I think it'll be a long conversation to kind of explain why Australia over some of the neighboring countries. But I will just maybe pick one thing to mention. The Australia, in certain definitions, we call it a developed country like Singapore, right? Australia is also has its base, the legal system has its base in Commonwealth law. So that makes doing business in Australia quite predictable and quite understandable. The people there, obviously, they speak English, so pretty professional. So when we were choosing which other market to go into, I think it was quite obvious that I think Australia, as compared to some of our neighboring countries, had an edge. And most importantly, we are doing in this part of the business real estate, right? And land titles need to be indefeasible, meaning that I can't have a situation where I paid for this piece of land. I thought I owned the land title, and then someone comes and tells me that you actually don't own the title because the great grandfather also has the same piece of paper, right? So this is a risk that we are unwilling to, and we will never underwrite, under the WeHer business, and therefore Australia, when we entered the market in 2014, that seemed to be that was an informed decision, right? But that was 10 years ago. And then this Mr. Centurion, LHN, interesting name, asked about Malaysia. Again, we have never done business in Malaysia. So for us to enter a new country. So I think what Australia has taught us is that it doesn't take a day, a month, or even a year to do business in the new country, because it takes a lot of network, ecosystem building and education, and really to understand the culture of the entire people over there, right? So for us to go into a new country, we don't take it lightly. At this point in time, we do not have plans to do so. And then again, between Australia and UK, this conversation is even easier. I think for us, if we are doing a control operating business, right, we kind of need to look at where the HQ is. It's in Singapore. Australia is 7 hours flight away. Time difference 2 to 3 hours. That's very manageable. But if you're talking about UK, I can't remember what the flight time was. 11, 12 hours. Pretty far away. And then the time difference, I think, was 6 or 8 hours. Right, 8 maybe. So I think the further away it is from us, I think the less keen we are from an operating business point of view. Okay, I think there were also some other questions. I will not answer any questions on share price, because share price, it depends on the market. It doesn't really depend on me. So I can't answer things like, do I see it breaking $1? What is my outlook on the current share price? But you can take a look at the history, right? Where it was 20 cents, and now it's 70 cents, and compared to the market, compared to the number of coverage and all this. So there is some planning around it. You know, and I guess this is, you know, where you can get some of your answers from. Okay, I think there is a question from Mr. or Mrs. Go about details of proceeds from the 250 million MTN drawdown. So that is largely, I think, as what I mentioned, any Singapore dollar is going to be going into all the Singapore dollar denominated projects, which you can only find in Singapore, right? So this money is all going into Upper Thomson GLS Springleaf side, is going into international school, is going into Hotel Miramar. Okay. And then I think just going back, Mr. Ramesh, asking about construction business. Maybe I'll defer to Andy about competition from Chinese players. But I will just say for 10 seconds that this is not the first day Chinese players are in Singapore market, right? Maybe Andy, you share the same view.
Yeah, I think like I've mentioned, right, actually construction business is very, very competitive. So, and in Singapore, we are very, very open, right? So the government doesn't have any restrictions. So any foreign companies can set up in Singapore and operate. So we have seen like, players from Japan, from Korea. Now we see a lot of influx of Chinese construction companies as well as property companies. So, like I've mentioned earlier, I think this competition, no matter who we are competing against, now is no longer just based on price. So, what we need to do is to upgrade ourselves, make sure that we are delivering quality project, so that we can actually compete against these players, right? Not just based on price, based on our brand name, our quality, and to look at securing project, not by diving our price, but to secure projects based on our track record as well as a reasonable margin. So we are not worried about this competition. We are facing this competition, and we are doing it our way by doing managing our projects well and doing well generally in our projects.
I'll
Yeah.
probably just add on maybe Andy, you want to describe a bit about the PQM process in case some of the participants are not aware.
Yeah, I think for PQM, right, price quality method, it applies to all public sector projects. So HDB projects as well as other projects such as MOHH project, LTA projects. So for public sector projects or government projects, right, they have a formula. 60 generally is about 60% basing on price, the tendered price, and 40% basing on quality score, which comprises a lot of factors like whether your safety record, your quality record, your conquest and things like that, as well as the progress, whether you are able to complete project on time and things like that. So all this makes up 40% of the total score, where they will evaluate and award to the contractor with the highest score. So actually the quality makes up quite a big percentage, 40% of the whole score. So that is why actually I think it is actually important for us to focus on how we manage our project and to do our project well, so that we can compete, and get projects even though we may not be the lowest tenderer.
Yeah. And Andy, since you're here, I may stay on with you because there are some questions for construction. Again, Ramesh asked about the HDB are typically prefab. I wouldn't agree 100%, but he asked about how we manage it.
Yeah, so prefab, I think prefab can be in many forms. I mean, we all know like PPVC, which is prefab volumetric, construction. But currently, I think for HDB is generally PBU, means prefab bathroom units, as well as precast. So we have been doing HDB projects for a long time. So we are very familiar with HDB's system. So we But this prefab actually not just for HDB. For most projects currently, we are going for prefab lah, or not just PPVC, but there are other methods of prefab currently being explored, like APCS, Advanced Precast System. So we are constantly following up on all these new emerging technologies and solutions, and we keep ourselves abreast. So whatever that we see that makes sense to us, we will apply it to our construction workflow. Yeah.
Okay. And there was a question about how the company manages volatile material costs like rebar, precast, and labor.
Okay, so some of the projects that there are fluctuation clauses. So things like rebar, concrete, all these they are covered under the fluctuation. But other than that, I think the risk is always there, right? The price may go up or may go down. So generally we try to look at the shorter to mid-term trend, but of course these are always influenced by global happenings and things like that. And recently, we all know that there are issues with soil and concrete in the whole industry, but these are issues that are faced by the entire industry. So, which is why we when we secure new projects, we look at reasonable margin. So, if we are going in by diving our price and trying to get projects near our cost, right? All these risks may cause us to lose money. So we are a bit prudent right now, especially we have projects on hand and we are not starving. So we are not looking to dive our price just to secure projects. We are looking at projects with reasonable margin that we are able to absorb some of these risks that may come our way.
Okay, and thanks, Andy. I will switch to Cheng Yu. There is a question on what is the leasing structure for the workers' accommodation.
I think leasing structure, normally we will definitely lease to company. I mean, it's a B2B business. Then the tenure of the lease maximum currently now is 1 year. Yeah, we can take in short-term lease, but we try not to. We try to take in a 1 year lease, try to take up the whole room. We seldom do bed by bed basis, but if really have to, then we will help out. Yeah, but currently it's about a year of tenure, and also we tenant the whole room to a company. Yep.
Okay. And then there is a next question, just staying on Cheng Yu, the Singapore business, about the hotel. There's a general question about what is the business model for the hotel business, like who are the target audience and how much capex is expected for this project?
I think business model for us, our business model is quite okay. I mean, we just have a hotel management agreement with DoubleTree by Hilton. We are very clear that we are just the asset owner, and we don't do the day-to-day operations of it. Yeah. I think this separation allow us to leverage on the Hilton's global operating expertise while we focus on the asset ownership and value creation of this asset, which is our core strength. Yeah. So another question is what? Sorry.
What is the target audience given the location?
Target audience will be the tourists, the business travelers, yeah, and of course the existing Hilton network people.
And then capex, is that something that we can disclose?
We can't disclose how much we will be spending, but I think this is an asset enhancement. It is not a total redevelopment. So actually the capex will be just for the upgrading works of the rooms and of the commercial podiums mostly. Yeah.
Yep. Okay. And then there's a follow-on question whether we are involved or potentially going to be involved in the day-to-day operations of the hotel.
No. So we are not involved in the day-to-day operation. This is not our main strength. Yeah, so the hotel is operated under the hotel management agreement by Hilton, the DoubleTree brand. Yeah.
So I guess there was some questions related to it, like
Maybe I add
operational
on, but
costs.
our role as a owner and as a JV partner will be maybe the strategic oversight of the asset, the budget approval, the asset management, capital planning, and maybe the performance monitoring, and yeah, of the operator.
Yeah, and just to finish off this question, for the attendee to ask about profit and what do we expect from this project. So the way to think about this is, we put money into this project to buy the hotel together with the partner, and also spend some money on the capex. Right, I do believe right, this is a strategy in the real estate playbook, where we value add. And when you do a value add investments, really your motivation, right, is to enhance the value of the asset. So I think that there will be certain returns expectations from that. But in terms of the actual numbers, these are the things that unfortunately we can't provide in this webinar. And then looking at time, we got 5 more minutes. So maybe just to finish off, 2 more questions, one from the Q&A, one from the webinar chat. Number 1 is, how will you describe the main catalyst to drive the profits of the company in the next 2 years? So I think it should be already quite evident from our robust discussion that construction will be a strong cash flow generator, a strong profit generator for the business. Our workers' dormitory will also be a strong cash flow and profit generating business. Australia student housing will also be a strong generator, although that may be a more medium to longer term, while we will collect a lot of fees from the fund management vehicle. And then also the Australia land subdivision business. That's definitely one of the main engines of growth. Right. And you asked about dividend policy. We do not have a dividend policy. Again, this is something that you can check our track record in giving dividends. And over the past, since we got listed, every year we give dividends, right? But now that our share price is, much more elevated than the past, we there is some thought and intent to kind of ensure that the dividends are growing in line, right, with the growth of the company. But fundamentally, we want to pay dividends every year. Okay, and then the next question is about how should an outsider be assessing the company with the different arms of the company? What should we be focused on to gauge your success? So I think inevitably, when an outsider looks at the company, unless they are very, very, very seasoned, right, they will look at analysts, and people that are covering us, right? And usually people do some of the parts, right? They add together and they give a conglomerate discount, right? That's fine. That's the way the market is used to. But what will I focus on to gauge our success? For the past 17 years, from when we got listed until 2024, our average compounded annual growth is 10% return on shareholders' equity. Right. So what I will gauge ourselves as the second generation leadership group. When I say second generation, it doesn't mean belonging to the family. It means as the next group of leaders that can take the business forward for the next 30 years. I would say if we can do better than that 10%, then we are successful, because we are here to create long-term shareholder value, and not quarterly earnings driven. Okay, so that's the next question. 3 more minutes. The next one is an easy one. Do we operate our own assets? Yes, for student housing. No, for workers' dormitory, and no, definitely for the hotel. Okay. And the final question, in terms of cash flow management in the business, what are the issues you have faced in the past? I don't think we have faced major cash flow issues in the business that we have had to, because it's quite telling, right? If you face serious cash flow issues, then you need to find a solution, right? And the solution will often be, number one, you borrow from, and you have cash flow issues because you can't borrow from a bank, or you misjudge certain things, or you had permanent loss of capital. Right. So I think really none of these have happened to us kind of in a major way. And it's quite telling because you can see our group, our debt currently, other than the MTN that we have gotten, it's a very, very minimal. We don't borrow from private credit. We have not had to borrow from family ever. Because if we had to borrow from the family, you would see it coming up in IPT. So I am serious when I say we haven't really faced much issues from a cash flow management point of view, and the evidence is all out there somewhere. Yeah, but this is the way I would think about it. Okay, with that, I think thank you everyone for your participation. It's 12:59. I'm glad we made it within the hour, and thanks everyone for all the questions. Although there are some that we couldn't answer, but we look forward to sharing some of these answers. When we report our results for 2025 next year. Back to Phillips.
Okay, thanks, Wee Peng. So as we come to the close of today's session, I'd like to just thank all of WeHer's senior management team, and also everyone who have taken time off today to tune in for all your these valuable insights and all your thoughtful questions that were being asked. So with that, we look forward to seeing you at our next corporate insight session, and hope everyone has a great week ahead. Thanks, everyone. Bye bye.
Thank you. Bye.
Thank you.
Thank you, everyone.
Bye-bye.
Thank you. Bye.